Welcome to Flow Tao Salon. Today, we are unpacking a research report released by the institution KPMG in April 2026. The report is titled 潮玩行业全景洞察与趋势展望情绪新宠生态建构. This chart maps the scale of the Chinese art toy industry, projected to reach 82.5 billion RMB by 2025. The trajectory continues climbing, expected to pass 213 billion RMB by 2030, representing a compound annual growth rate of 18.7%. This donut chart identifies the psychological driver for that growth. Among Gen Z consumers, 92.7% prioritize emotional value over pure utility in their spending. This preference results in the retail reality we see here, shelves crowded with high-concept figures designed to forge immediate personal connections with the buyer. But building an empire on human emotion is technically difficult because trends expire quickly. To survive, companies must move past simple manufacturing and engineer a resilient, data-driven ecosystem. The toy business faces a constant threat: warehouses full of dead stock when an IP fails, or massive missed opportunities when a viral character sells out instantly. The industry solution is a technological framework known as the flexible supply chain. This process loop allows companies to operate on a 6-month prediction cycle. They release designs in small initial batches and use real-time sales data to immediately scale or cut production. AI systems integrate with this loop to track regional aesthetic shifts. This allows the company to instantly optimize exactly where and when specific designs are distributed to match local demand. This digital integration converts subjective emotional trends into precise, actionable supply chain data. Product strategy is shifting away from the pursuit of broad mass-market hits towards a deep dive into specific subcultures. These art toys function as high-end social currency. For collectors, the product is a legitimate art piece, signaling their identity within a specific community. The firm Wu Liu Culture focuses exclusively on high-net-worth fans of specific film and television properties. By pairing physical IP cards with digital collection value, they generated tens of millions in total sales from a very narrow, highly dedicated audience. Targeting a deep niche creates stronger brand loyalty and higher margins than competing for the attention of a fickle mass market. Scaling an emotional ecosystem to a global level requires the backing of institutional capital and strict corporate governance. For art toy companies seeking to go public, the Hong Kong stock market serves as the primary gateway to international investors. This financial map illustrates the Stock Connect system. It allows companies listed in Hong Kong to simultaneously access international capital and mainland funds. However, these companies face a gray rhino risk, the threat to valuation if they rely too heavily on a single IP, or if they face a public backlash over irrational consumption. Because of these pressures, a Hong Kong IPO is a mandatory evolution. It forces cultural startups to build bulletproof corporate compliance to survive emotional volatility. Art toys have moved beyond their subculture roots. They are now the primary blueprint for a new, consumption-driven economy. The first takeaway is that emotion has become a primary currency. Future brands must prioritize selling emotional resonance and social identity over functional utility. Second, agility determines survival. Without AI and flexible supply chains, companies cannot keep pace with fast-moving cultural trends without being buried by inventory. Finally, diversified ecosystems outperform single IPs. Relying on one-hit character is a fragile strategy. Long-term sustainability requires a network of digital, physical, and financial assets. By integrating psychological insight with agile technology, the art toy industry has defined the requirements for China's next phase of consumption. 陶醉沙龙，马年兴隆。